Hello everybody, welcome back. It's 25 Invested here, and I have some news. I am buying a new car. I needed a new car. I have a Chevrolet Spark. I need to buy a new car. That's going to be one of the biggest expenses this year, and it's going to be about $30,000. It's not in yet. It's about 3 months away. $30,000 all in. That's after everything. It's a Mazda 3, so that's pretty expensive. I'll be trading in the car that I currently have in its current condition with a moderately cracked bumper. It just is what it is, which brings me to, I guess, something that you guys don't see. I haven't been adding to my Tfsa or my HFSA, and there's good reason for that, mostly because there's a car coming, but just because I stopped adding to it doesn't mean that I stopped accumulating money. So myself and my wife have a second account, a joint account plus our own separate accounts, and altogether there's about $45,000 in those accounts. So that's something that you guys don't see on here, and that's something that we will be using moving forward with the new car. So that's basically going to kill a large portion of our savings, but also something that you guys don't see. And I did make a Blossom post. If you don't follow me on Blossom, go follow me on Blossom. It's in the link below. She's done school. She's done school this whole, I guess, for the past 2.5 years. Most of the money that has been saved pre her schooling, and with the money that she's made on a part-time job that pays next to minimum. So with that being said, she will be moving to a new career and making quite a substantially large amount, actually more than me now, which is fantastic, and we will be able to tuck away quite a lot more money. That being said, we are also moving, so I will not be in my bedroom anymore. This is a single bedroom apartment. This is a single bedroom in a shared house. So to cut costs while she was in school, we did move into a shared living arrangement, and that's what has been giving me the ability to save as much as I have. And all of my income has gone towards making sure that the car was paid for. That we had, I'd say I saved only a little bit of my money because I bought food and the living arrangements and everything else accompanied with that, and then everything that my wife has made was put into savings. So that's the stuff that we were actually saving. So my income, it made sure that we could pay for everything, but then her income was that extra bit. That being said, we did do it was a good year. It's been a good couple years, and we worked really hard for that. So I'm really happy to see that she's done school. We're going to be moving into a 1-bedroom apartment, which is quite a bit more expensive, but we will also be making a substantially large amount more money. So it's a flip-flop back and forth between we're doing better or we're doing equal. I think it's about time that we moved out and found our own place. I mean, we are approaching 30, even though the channel's 25 and invested. I'm 28. I started investing when I was 25, so that's where the channel name came from. And yeah, it's been good. So if we take a look here, 79,000. I'm gonna still make the thumbnail 80,000 because I like the round number. It is technically 80,000. I got the penny stock account. Come on, give me that much. This day, week, we are down 1%. It was actually a pretty crazy week this week. A huge pullback on Apple. Very nice. We're up, 3% on the 1 month. We're up 9% on the 3 months. Up 1% on the. Up 23% on the 1 year, and all time we are up 17%. So there have been times when I wasn't doing as good. There were times when I was doing better, and I will see volatility in my portfolio, and that is mostly because I invest in singular stocks. So moving forward, I will be making my wife's Tfsa and helping her with that, and I do believe I mean, like, I was talking to her about it, and of course, I probably won't be doing as much stock management on her TFSA. I think that's going to be just ETFs. So I think that it'll likely be just XEQT in my wife's account, and, you know, with caveat of maybe one other ETF, VFV, or, you know, something else, and that's just to keep her side simple and my side moving. Not moving up or down, but I mean like moving as in keep me active, because I want to be an active investor. I want to be a value investor, and I want my channel and my stocks to they would display that. So yeah, I mean, we're still talking about it, what her side's gonna look like, because she is not from Canada, and she has different rules, and she has a different amount of money to put in, which I think we will cap out very quickly. So, you know, with all that being said, that's just, it is what it is. We're gonna do the best we can with what she wants on that side, and yeah, I'll try to keep my input out of it, just because I want her account to be what she wants. I don't know. Yeah. Anyways, moving down, I'm up only 25% on Apple. That is after the pullback. So Apple has been going through a pretty rough time lately, and everyone's calling for the dump of Apple. Oh well, I can get hit a high of like $200. Not bad. Algonquin Power, still my worst performing stock. I think 45% down, 46% down. I think that's the worst one yet. Damn, I think it was like 660. I bet you that would have been a good time to buy. I didn't look at the debt. I don't think that they solved that problem. Moving on, you can see BlackRock 25%, 25% up. Alibaba minus 33%, 34%. That used to be the worst performing stock. Actually, my worst performing stock used to be Meta. Yeah, times have changed. Brookfield, not bad. Bank of Nova Scotia down 4%. Berkshire Hathaway up 32%. I do believe this is the highest I've seen it at 365. Its price to book ratio is 1.52. Historically, that's like one of the highest it's ever been. So, you know, I'm thinking either they grow into an evaluation, or more likely that there is a pullback. Maybe they'll meet in the middle. Cash. I still have my cash account. That is 8,000. That is 10% of my portfolio right there. It's just in safe holdings. I wanted to get dividends from cash, and then I wanted to reuse those dividends almost solely for XEQT. Caterpillar up 43%. Dollar General. This is one that I was actually catching some flack on. Blossom about this one. I don't know, it just looked like a value play. It looked like it was overextended downwards in the RSIs. It looked like a company that was buying back shares. It had high debt. There are problems with the company for sure, but they did bring back their old CEO. We'll see what happens with Dollar General. I'm excited to see what happens with Dollar General, and I'd do it again. I wasn't met with immediate success on this one, so even though I'm up 7%, I used to be down about 25%, so that was a lot. Dream Industrial, I'm up 9%, not bad actually. Dollarama, I'm up 75%. That's not my biggest stock, is it? Empire, yeah, down 5%. Haven't touched that in a very long time. Google, 17%. Pretty good. Home Depot, 11%. Ooh, that must have come down a little bit lately. If that hit 300, actually, I do believe I was looking at that at 275, but if that hit 300, I think it'd be worth picking up another 1 or 2 shares of. That would be nice. Intel, 40%. Intel's been on a tear. I think they almost hit 50 or like 48 not too long ago. That was nice. That's sweet. I should probably not block the light. Maybe I should block the light. It's in my glasses. Meta, 86%. So that is my top stock still. Nice. Manulife Financial up 28%. Now this actually showed up on the acquires multiple site, and I was a little excited about that. I believe I bought it at some pretty advantageous times. Just one of those, you know, I wish I could have bought more ideas, which never feels good. But you know, if there's one thing that I've been changing about my portfolio, is that I would enter the position that I want as a full position and then either average from there, up or down. Obviously I'd like to average down, but Manulife Financial is just, it's up 28%. It used to be a very you know, a not very volatile stock, or a very you could tell where it's going, or what range it's been in, and what a value was when it was in those ranges. But now it's breaking some pretty crazy all-time highs in the past few years. So yeah, I'm pretty excited to see what Manulife Financial does. Microsoft, I'm up 40%. And NEWT, I'm down 47%. This is my worst performing stock. Officially, NEWT is my worst performing stock. It's one of the first things I invested in. It is a bank. They're turning into a holding company. I've done a little bit of research. At the end of the day, they're diluting the hell out of everybody, and I keep it here. Even though it's a loser, I'm going to keep it here. One of these days, maybe it will be a value play. Hopefully by then I'm not down 99%, but that's just the way she goes. That's the motif of the portfolio. I'm up 17% on RY. That's pretty damn good. Nexus REITs, I'm down 12%. I did pick Dream Industrial over Nexus REITs. I would still do that. VIG up 6%. Walmart up almost 20%. Nice. And XEQT up 6.34%. My biggest position. Up, you know, almost a $15,000 position, and I hope that I can expand on that. I will be adding more XEQT one of these days, again probably about the same time. So I figured when I put all my money into Berkshire, I will also add it all to XEQT. I will be adding the other $7,000 I'm allowed to add this year to my Wealthsimple account. I will be adding that this year. I will be able to max it out after I get the car. Once I get the car, you're going to see some pretty big changes, especially when I open up the First Home Savings account. I will just run the First Home Savings account with this. So when I do my Tfsa, I'll go out, I'll go into the First Home Savings account, and I'll keep it all as one video because I don't want to split it up. I think that would be kind of lame. Anyways, that's it. Let me take the glass off. I can't see anything. Bye now. I'll see you guys next time.